The big one is here. So, what exactly does that mean? And what exactly do we do? Because you might be thinking, what do we do into Friday close or the weekly candle close? Well, that's exactly what I'm wondering because whether we look at the daily chart or the weekly chart, we get different stories. Let me show you why. There's this beach ball, which is still currently above water, but tomorrow we have a big one coming, which is going to be the non farm payroll, unemployment rate, and average hourly earnings. This is like the CPI print from before. It's going to be the most important data point for the whole month. Are we going to go lower? Right? I don't know. We could keep going up. On the daily chart, that's what really matters. It's 565. We can move 1%. We can move more than 1% tomorrow. So just be mindful of that. Also, please remember on the weekly chart, as of right now, our bullish pattern is starting to capitulate. Why? Well, last week we had a failed breakout. So even though technically still a higher low and a higher high, we failed to hold progress that we made. We went to a higher high and failed to hold it. The NASDAQ was really close too. This week, we actually have a breakdown. That's not good. We're battling for last week's low. That's at 567.6. So like I said yesterday, if we close green, good. Why? Because if we close green, we're going to be above that key area. We're going to have a failed breakdown next week. So you're talking about these failed breakdowns, failed breakouts. What does that really mean? I'll get back to that in a moment because I think people might be getting a little bit confused. All I'm looking for is, do we make just like here, we have a number of failed breaks in a row. We have a bullish engulfing, failed breakdown, failed breakdown, failed breakout. Charts are breaking. Yes, because everyone's wondering what to do as we go into elections. That's literally about 5 weeks away now. Okay. So the big one's going to come tomorrow, right? What's Sugar Daddy Papa Powell going to do? Is he going to say time to take the punch bowl away, or time to sip up, right? The party is early. Well, we're going to find out. I expect, again, this is what I expect. There's the news and the reaction to the news. I think what the market's going to be focusing on tomorrow. Let me actually pull a tool up because I want to get a data point here. I think what's going to really matter is what we're expecting for the Fed Fund Futures, which is what I think I'm looking at here. Yeah, here we go. Fed Fund Futures for November 7th. And right now, there's a 67% chance that we're going to be at 450, or I think that means one cut. I'm pretty sure it means one. So if this number starts shrinking and this one starts growing, why would that happen? Well, because the labor market is deteriorating. So if people lose their jobs, it means the Fed is likely going to cut more. This number, if it comes in at 0.3, excellent, right? That means inflation's going down. This one here, we'd like to actually see it green. So this is what I don't know. And because I just literally said this will be like the Super Bowl, whether we stay above water or below is going to tell us what the reaction to this is. If we're red, I'm going to assume we're going to be below water again, where they were able to hold it down, and that was a false break. Now we're going to go back down and minimum test the 50 DMA. That's what I would expect. Looking here to the weekly chart, well, we've broken our bullish pattern. Where could we go? Potentially as low as where the rally started. God forbid, even down to support. Look how far we've deviated from the moving average. There's a true test to the 50 MA. Low, higher, low, higher, low. We're ratcheting it up support. It doesn't mean we can't go down. It just means that if we do get a drop, I don't know where true support is. I would expect it to be there. I would also expect it to be on a higher low, which would be potentially as low as the 50 MA as it continues to curl higher. So again, just be mindful of these levels because, right, the only thing that's for sure is that nothing is for sure. Yes, and Home Run did have news today. Please look at that if you want to see more about it. Stock was up double digit today. So what do we do, right? That's important. Yes. Well, we'll find out tomorrow. I think I'm doing a pretty good job so far. We got about 4 minutes under our belt. We got some NVIDIA news to get through. But first, if you guys don't mind, please considering to smash a thumbs up or subscribing to the channel. I would greatly appreciate that. So why is NVIDIA going mega big up? We got NVIDIA, we got Meta, and then we got energy. So what's going on today? Well, Meta's doing a good job and they're releasing new products. They're getting a return on investment for their AI. That's what's happening. So post window dressing, people still want Meta and they want NVIDIA. NVIDIA, big move today, 3%, back above $3 trillion market cap. Yeah. Why? Because AI chip demand is insane. Blackwell AI, right? Time to have a party. Let's go. Right? Jensen saying this was in an interview with Accenture. I watched it. We talked about it this morning. And OpenAI actually just closed, I don't know if I have the article handy, $10 billion in total credit availability. They have a $4 billion revolving line of credit. Whoa, more. I didn't watch the video yet. Maybe we'll have time for it, but 10 billion in liquidity, right? That's literally a money printer. Who's it going to go to? Probably Nvidia. Why? AI chip demand is insane. Market loved that. They're like, oh my God, it's insane. Let's go. And I did talk about that other company that'll come in to compete with it. But, anyways, right? Let's stick to the story. We're currently in greed, 1 point lower than yesterday. We went from extreme greed. Now we're lower. So as we're going into the weekly close, I also talked about 63 and 65. We're sitting here at 67. I'm assuming that if we're going to lose that area, it basically means we're going to also be below 565. Pretty simple. So we want to stay above 65 for fear and greed, ideally 66 or higher, which means we don't want to go red. Red is bad. And we don't want to be red on the tape, which means the S&P. Finally, we talked about this alert yesterday, and some people seem to understand, some don't. This is still your hot tip from yesterday. I still like this idea. 3.3, even if we're wrong, we only have to be right 1 in 3 times to make money. Why? Our risk reward is 3.3 for every $1 of risk. And this tells us that there's potentially a window of opportunity for SH to go down, which means if tomorrow we go down, I'm going to say, I told you so. And you guys are going to say, oh, well, you had maximum optionality. You said we could go down, we could go up, or we could go sideways. Of course, that's all stocks can do. People seem confused when I talk about that. So if we go down tomorrow, if you remember at the beginning, I said there could be a 1% move, could be even more. Remember CPI days? Yeah, 1-2%, no problem. It could be a nothing burger because data comes in line, or it could be a big move. I also said, I don't know. If you told me what the numbers were tomorrow, I couldn't tell you what the reaction is. I need to see what the reaction is. Is good data good? Is bad data good? Is kind of bad data good? Is really good data good? I don't know. Let's find out tomorrow. It's going to be coming out, and you can tune in with me to find out more about that. I think that's it. So we talked about Caron. We talked about these companies spending. Talked about Nvidia. Yeah, so it's insurance. Insurance is good. Why? You're happy to pay insurance. You never want to cash it in. But if you need the insurance, you're like, thank God I had it. All right, that's it for today's video. So tune in with me tomorrow at 9:15 a.m. if you want to see those updates to the payroll number. Thanks so much. I'll see you on the next one.